Hi, my name is Kierin and I'll be your DeFi guide. In this video, we'll be covering these 5 reasons why I'm super bullish on Ethereum and why it's likely headed towards 10,000 US dollars or 1 trillion US dollar market cap. I want to thank Aave, the open source money market protocol, for sponsoring this video, but more about them later on. Ethereum, as you might already know, is very similar to Bitcoin, but it's a lot more than that. It's programmable money. It acts as a decentralized world computer with smart contracts, which allow software, decentralized applications to run on this foundation, the Ethereum blockchain. And the token behind all of that is the ETH token. So the first is the Ethereum 2.0 upgrade. Number 2 is the decrease in supply for ETH in the future. ETH will become a deflationary asset. The amount of ETH locked up, the decentralized finance space, and last but not least, the market cap of Ethereum compared to the monies of the world. But first, let's talk about Aave. Are you tired of not earning any interest on your money in your bank? Let me introduce you to Aave. Aave is like your bank in the DeFi space, where you can earn high interest rates by lending your crypto in a permissionless savings account. You can also use the deposited funds as collateral to buy some more ETH and increase your exposure. With an Ethereum wallet and a few clicks, you can start earning high interest rates on many different cryptocurrencies such as DAI, USDC, TUSD, and many more. No registration or KYC needed. Furthermore, Aave just released version 2 of their protocol, which is audited by 4 different companies. Try out Aave platform by clicking on the link in the description and start making your money work for you. The upgrade of Ethereum proof of stake to proof of work, also known as the Ethereum 2.0 Serenity upgrade. The Ethereum proof of work blockchain is actually pretty slow. It's supposed to be running at 15 transactions per second, but very often it's much slower than that. I mean, of course, there are some layer 2 scaling solutions which try and offer some relief in terms of transaction speed and transaction costs, but being able to on-ramp funds onto these layer 2 scaling solutions is pretty expensive. So in my opinion, these layer 2 solutions will only be effective as soon as Ethereum 2.0 is fully upgraded. So this Ethereum 2.0 upgrade will happen in 3 phases, actually 4 if you count phase 1.5. So you've got phase 0, proof of stake, which is the beacon chain. That launched on the 1st of December. Phase 1 is data sharding, phase 2 is state plus execution, and phase 3 stacks plus further scaling. The Ethereum 2.0 blockchain will have shards which you can compare with blockchains running in parallel to the beacon chain. So this can be compared to many different islands that you live on, you interact, you do all your stuff on these islands, and not one single island gets massively congested. So you can compare the Ethereum 1.0 blockchain that we have at the moment, like one island, and everyone is trying to do their transactions, move back and forth. And as you can imagine, with a lot of people on one single island, it gets completely congested, everything gets slow, it gets costly to operate. So hopefully now with Ethereum 2.0, as soon as all of these phases are through, the transactions can actually be sped up to maybe 100,000 TPS or even more, thanks to layer 2 solutions, which will also be included on Ethereum 2.0. It will probably take 1.5 to 2 years, but when that's done, it will serve as a fantastic foundation for the whole DeFi space to thrive, because at the moment the DeFi space is growing at an exponential rate, but the Ethereum 1, so the proof of work blockchain, is not able to handle such massive influx of users. Now, the second argument why I'm super bullish about Ethereum is also closely related to the Ethereum 2.0 upgrade, and that's about the decrease in new ETH supply. As you might know, the Ethereum that you know today is inflationary asset, so there's always more and more ETH that's created every block. So when Ethereum started out, the increase of ETH per block was at 5 ETH per block, then it was cut down to 3 ETH per block in 2018, and in 2019, the supply had another 33% cut to 2 ETH per block. So you can compare it to the Bitcoin halvings that were happening, but this is on the Ethereum blockchain. With the Ethereum 2.0 upgrade, there's actually discussions of a 10x decrease in supply. So with the current 110 million ETH supply of Ethereum, that would put the inflation rate of ETH at 0.4% per year, which is actually a lot lower than Bitcoin's stock to flow ratio. Now, furthermore, there's another implementation called EIP 1559, which would actually burn a part of the transaction fees. Point number 3, the amount of ETH that is locked up. So this is definitely a very interesting aspect of this bullish case for ETH, because the more ETH gets locked up, the less supply is available for new buyers. Now, there are many different ways that ETH can get locked up. First of all, you've got the hodlers that keep their ETH. They want to keep it for a long term and they're not willing to sell. Second of all, you've got the DeFi space and smart contracts. At the moment, there's around 6.6 million ETH that is locked up in DeFi. That means people that are locking up their ETH in different projects, maybe Maker, Compound, and so on, to earn some interest, or maybe even use different platforms to trade, and so on. There's many different opportunities. However, 6.6 million ETH is locked up and not in circulating supply and available for new buyers to buy. The third option is the amount of ETH that is locked up in staking on the Ethereum 2.0 blockchain. So now that it's launched, validators had to lock up 32 ETH in order to be able to stake on this new blockchain and secure it. And these 32 ETH will be locked for 1 to 2 years until the phase 2 of the Ethereum 2.0 blockchain has passed. So these ETH are out of circulation, cannot be sold on the market. Bullish reason number 4 is the DeFi space. Decentralized finance, are also known as open finance. The main vision of the DeFi space is to bring the traditional financial tools and services onto the Ethereum blockchain in the form of DeFi apps or dApps, and allow people to access these tools and services without having to deal with third parties. So the potential of the DeFi space is ginormous. I mean, the DeFi space already at the moment encompasses a lot of traditional financial tools and services. It's basically the entire financial market and a lot more, because thanks to the interoperability between all of these different tools, a lot of fantastic new applications and services can be created, such as flash loans. Let's have a quick look at what's actually happening under the hood of the DeFi space. There's a lot of development that is happening, a lot of different layers that enable such a decentralized economic system. Layer 0 is the ETH stake rate. It's running on Ethereum blockchain. This is the foundation for the whole DeFi ecosystem. At the moment, it's running on proof of work, but soon it'll be running on proof of stake. Then you've got the layer 1 DAI savings rate stability fee, which is the maker. Here you can lock up ETH and mint DAI, which is a debt-based stablecoin. Then you've got layer 2, the borrow and lend rates, Compound, Nuo, DYDX. You can actually lock up different cryptocurrencies. You can earn some interest, but what you can also do is you can use these cryptocurrencies or stablecoins as collateral and then also increase your risk. Then you've got the layer 3, which is the application layer, where also ETH is locked up in DeFi. Last but not least, you've got the user aggregation layer, and these platforms actually allow users to interact with the different DeFi apps protocols, allowing users to enter into one of these platforms, which often act like a bank or a DeFi interface, where they can see their funds, how much they've lent or how much interest they're earning, or what kind of tokens they bought, what kind of trading strategies they bought, and they can interact easily with many of these protocols without having to give access of their funds to a third party, since most of these platforms or actually all of these platforms on the aggregation layer are non-custodial. That means you interact using your Ethereum DeFi wallet. Now let's continue with the market cap of Ethereum, but it's still going to be using some aspects of the financial space, because I think this is super interesting. Now, if we think about the financial world and all of the monies together, there are some very large sums, and actually puts into perspective how small the whole cryptocurrency space is, and also how incredibly small the DeFi space is. And if something's small, something else is big, then probably that thing that is small is going to get bigger in the future. So first of all, you've got the American Fed balance sheet is worth roughly 4.5 trillion US dollars, which is a multiple of the current cryptocurrency market. All of the world's cash combined, so all of the physical paper money that you can touch, is worth roughly 7.6 trillion US dollars. The world's stock markets are worth roughly 73 trillion US dollars. The entire money supply, that means M0, M1, M2, is roughly 90.4 trillion US dollars, and the global debt is roughly 215 trillion US dollars. Real estate worldwide is approximately 217 trillion US dollars, and the largest of all is the derivatives market, which is roughly 544 trillion US dollars. Let's have a quick look what that would mean for the Ethereum market cap and the ETH price should they manage to capture a fraction of these financial markets. So if we take the sum of all of these markets together, we get 1,151.5 trillion US dollars, or 1.15 quadrillion. So let's take a very small fraction of these combined markets and look at how high the ETH market cap will be and how high the ETH price will be. So at 0.01% of these world markets, that would place the ETH market cap at 115 billion US dollars and the ETH price of $3,003. At 0.1%, we're going to have an ETH market cap of 1.5 trillion US dollars and ETH price of 30,000 US dollars. At 1%, it's going to be $11.5 trillion, ETH price of 300,000 US dollars, and 10%, 115 trillion, $3 million per ETH, and at 20%, that would place it at 230 trillion US dollar market cap for ETH and a $6 million US dollar price tag. Nice. Furthermore, you've already got several platforms that are offering derivatives such as the synthetics market with no registration or KYC. Anyone with a smartphone and a few ETH can already tap into the derivatives market, and this market is 544 trillion US dollars. I have no clue what percentage the Ethereum blockchain is going to manage to capture, but I'm pretty sure even if it's just less than a percent, I'm going to be extremely happy within the next 5 to 10 years. So with that said, I hope you enjoyed this video. Make sure to check out the sponsors Aave by clicking on the link down below. With that said, I'll catch you in the next video. Have a good one. Bye-bye.